All right, YouTube, what is up, everyone? It happens to be Thanksgiving today, so happy Thanksgiving. But I'm saying that because we are going to pin this video to the homepage of the YouTube channel. This is going to be just kind of my thank you to everyone as I've been on this series the past couple weeks, flipping 2K to 10K series, but more so finding a real strategy that's actually having an impact on a lot of people's lives. I think someone even said that they're up 40 grand in live funded accounts in just last week from trading this method. Clearly, we've done well. Clearly, other people are doing well. And clearly, it works because we're able to find the same exact entry every single day. So, what I wanted to do today, I took the day off the charts. The charts were moving some. But what I want to do today is I want to give back and basically make a strategy video that people can come back to, that they can refer to. And so I've done that, but also I'll go into it a little bit later in the video. I've also created a trading checklist and just a very basic trading rule sheet where you guys can just kind of keep that in your back pocket. That's completely free for you to have. That I've put a lot of instruction in it, but also images and screenshots that you can refer back to when trying to learn the method. So what I want to do in this video is those things, but I want to take my time. This is going to be a video we don't rush through, but I think the main focus of this video is going to be if you want to trade this strategy, A, how does it work? And then B, what does it look like on a daily basis when you sit down and you actually try to implement it and to apply it? And what do I do to trade this strategy? So the very first thing, this is going to be kind of a crash course. I'm going to go into detail and I'm going to take my time explaining what we're actually trading. We are trading ICC from Trades by Psi. Now this is candle continuation theory, which is my version of what Trades by Psi has already put out. So I need to stress that over and over. This is not my strategy. It is Psi's strategy that I have taken and I have made a mechanical version of called candle continuation theory. And the reason is because I trade ICC, which is Psi's trading strategy, but I trade it with candle ranges instead of trying to spot the ranges with my eyes. So for those of you who don't know, the markets move based on trends, and the markets trend like this. If we're in an uptrend, it looks like this, and then if we're in a downtrend, it looks like this, and I'll make it red. It doesn't look as clean as this, but once you guys start trading the method laid out, you're going to find that the markets actually do look like this. They look like this a lot more than people realize. And so what Psi has taught is he has taught basically when to enter in these trends. And the way that you know how to enter, let me make this a little thicker for everyone to be able to see. And I'll make the downtrend, we'll delete the downtrend right now, we'll focus on the uptrend. Basically, when a market is trending upward, the whole idea is that it's forming higher highs and then it's forming higher lows. So price is increasingly getting higher and low, and the trend is basically going upwards, and then it's pulling back, and then it's going upwards again, and then it's pulling back, and then it's going upwards again. Now, if you go anywhere on YouTube or anywhere in general and try to learn trading, the whole basis of making money in trading is to A, identify a trend, and then B, learning when to get in inside of a trend. And Psi has completely, I think, just absolutely switched up the game on people, because the whole idea that people have had in the past is that how do we know, okay, if this is an uptrend and it's going to continue, how do we know when to get into the market, and how do we know when it's going to make its next move higher? Let me do this. Sorry about that, guys. How do we know when the market's going to make its next move higher? Now, this is what everyone tries to teach. Everyone tries to tell you how to predict these points. Now, Psi tells you that you don't have to predict it, but the chart will actually show you. And so in the past, people will teach that, there might be a Fibonacci level right in here, or there might be a fair value gap right in over here, or there might even be an order block right down here. And so people will find all these different reasons to try to basically take price higher and they'll get it right sometimes and they'll get it wrong just as much. And the reason is because you are still inside of this range. Now you have to understand that in order for price to go higher, price is not just making a trend like this, it is ranges that are moving in certain directions. So let me break it down for you. When we had price over here in this range, we had basically this was a high and this was a low, right? So this was the low of the range and this was the high of the range. Now, as long as price is in here, we don't know if price is going to go higher or lower because it can, continue breaking down out of the range or break higher. Well, what happens is, and this is how you know that the trend is going higher, this range gets broken higher. Now, this is going to sound very basic to you, but you're going to see, okay, when this range gets broken higher, we form a new range, right? Because this is a new high and this is a new low. So you're continually moving ranges higher, and you can see that you're inside of these ranges and you move them higher and higher. And then what happens here? Price breaks out of the range again. And then what happens? We have a low here and a high here. So the range is moving higher and higher. So this is all going to make sense in a second. And why do we not want to take trades inside of here is because we are still inside of the previous range, right? So you have to understand this. Yes, price broke higher. How do we know it's going to make another leg higher now? You have to understand, until we break past this high again, until we're outside of this range again, we have no idea if it's going to go higher. So price can come down into, like we said, it can come down into an order block, a fair value gap, anywhere in here, but price does not have to go higher and continue that trend whatsoever based on an order block, fair value gap, Fibonacci, anything. It doesn't have to. But what it does need to do in order to show you its hand, for the market to show you its hand and for you to know it's going to go higher, is it has to break out of that range again. So you have to understand, a lot of what people are teaching is you're taking trades inside of this previous high point and this new low point, and any fair value gap, PD array, whatever it might be inside of here is all still basically gambling, because it is just taking trades off of maybe an area of orders. But unless that area of orders pushes price up back outside of this range again right here, you have no idea if that trend's going to continue for real or not. And so what happens is, Sai has taught that if you can get back, if this point created a new direction of the trend and you broke beyond this point, you're going to now wait for price to finally break above that point again. And this is all you're doing. You're replicating price movements. You have to understand this. I'm going to try to go slow and explain this. You are not trying to come up with some trade. You are trying to take the trade the markets have already made. You're trying to make moves that the market's already made. So basically, when price got above this point last time, right here, price went all the way up here, right? And so you have to imagine this as a trade itself, right? This is not a trade you take, but this is a trade the market showed you. Now the market showed you that price went up to here, and I'll even draw this line on. Price went up to here. We'll delete this for right now. Last time that price got above this point, we went here. So when price gets above this point again, we are going here. And this is what Sai teaches. You're basically mirroring the market, and you're doing the exact opposite for sell trades as well. Now here's the thing. I don't want to take too much time on this because I'm just kind of going over what Sai goes. Go to Sai's channel if you want to learn exactly how he does it. This is exactly how he does it. But I personally had a problem trying to find this with my naked eye. I would do right sometimes, I would do wrong other times. And what I found to be extremely accurate and true, let me delete all of this, is that instead of trying to spot, like on the 15-minute, instead of trying to spot like in a market like this, I'm just going to keep it zoomed out so you can just kind of get the picture. Instead of trying to spot, okay, when do I, where do I draw my lines? Where is the trend? Where is the range? It could be in here. It could be, sorry about that. It could be in here. Like the market's constantly making small choppy price movements. And if you're focused in on one time frame and you don't have predetermined ranges, which I'm going to show you in a second from a low or a higher time frame, you're going to be doing a lot of guesswork. And Wall's size strategy is extremely, and I repeat, extremely accurate. He also has developed an eye over the years to be able to see these things naturally, and he's extremely skilled in what he does. However, for me, I've only been trading, I've been trading 5 years, and I would say I have developed a strong eye for the market. I would say that size natural eye for price is it might not be something that can be learned, right? And I don't say that to discourage anyone, but he just has like a natural innate ability to spot price and what it's doing. And yes, he teaches very well, but sometimes I found it personally hard to replicate. And so what I did is I said, okay, if he's basically just spotting ranges on his own, waiting for breakouts, so on and so forth, aren't candles themselves actual ranges? Candles themselves give highs, they give lows, and they give everything in between. And then when a range, like basically let's do this, let's go right here and I'll show you what I'm talking about. This candle range right here is a daily candle. Now this daily candle has many different things. It has 4 different things specifically. It has a, sorry about that, it has an open, a close, a high, and a low, but we're going to focus on 2 things. Let me just do this. We're gonna focus on the high of the candle and the low of the candle. Now this is a daily candle, but it's a daily candle range. So the candle itself has a high, and now it has a low. Let's put this in the center, and it also has a low. Now instead of coming to the markets, I don't know why that put it in the center too. Let's put it in the center. Okay. Now instead of coming to the 15-minute time frame, for example, and trying to guess where you should draw on the high and the low and where you should wait for price to break out, you can see very clearly that this is the daily high and low, and you would have never drawn this on if you didn't have the daily candle range in mind. If you didn't go to the higher time frame and look for, if you don't get anything else out of this part of the video, you need to get this. The daily candles are ranges. And when candles close beyond each other, that is a trend, especially on the higher time frame and then chop down in the lower time frame. You have a range moving beyond a range, moving beyond a range, and that's exactly what we showed you in basically the line drawn on like that in the beginning when I was talking about trends like this. That's exactly what you're seeing, but when you're seeing it now, you're seeing candle ranges instead, because every move higher is a new candle. You can see that's exactly what we're doing. We're identifying trend like this, and you're just trying to catch a new daily candle or a new daily movement higher and higher. And this is what it really looks like if you just make it mechanical. And the whole point of the strategy is to make what size teaching mechanical and to take our discretion out of it. If we can take our discretion out of it, it is going to absolutely be day and night game changer. So here's the thing though, when you have a high and low like this, you are basically now waiting on the daily time frame, not your lower time frame, so you don't need to be on the charts all the time. You're waiting for price to break out one side or the other, because when you're waiting for price to break out one side or the other, you are trying to do this. You're basically in a range like this, and you're trying to see which way the trend's going to keep going. And if you're going to go higher, then price is going to break out higher. So what is this actually? Let's do this, take that off. What is this actually right in here? This is the same thing as this. And once you get a candle close outside of it, you get a candle continuation higher. I don't know why I just did every candle. So you see right here, this candle close higher is the same exact thing as this leg higher in a trend. And so now the last part you're waiting for, and we'll kind of zoom in. I'll take this off so we can focus on the example. And then I know this is kind of confusing right now. It's going to be a whole lot less confusing when I show you on a daily basis exactly what you should do, the checklist, all of that. This honestly shouldn't be that confusing. But when you have a daily candle close higher, you're basically closing outside of the previous daily candle range, right? I'm trying to show you guys what size shows you, and then I'm trying to show you how you can see it with daily candles. And then you're waiting on the third day now, you're waiting for price to pull back. We'll make it red. This is candles not closed, but price is pulling back inside of the range. That is the pullback. And then you're waiting for it to flip back out, and that daily candle is basically going to have made a wick and then go higher like this. And it'll have made a wick inside of the range. Let's just make it black. And then we'll make this green again. And that's how you continue trends, and you're able to catch this wick right here, and you're basically able to target draw on liquidity, so on and so forth, and take these trends. So Sai is teaching, basically you can see the blue line right here like this. This is what he's teaching. And now we've found a way with daily candles to see it mechanically. So we're going to get rid of all the drawings now. I hope this makes sense. We're basically trying to trade with the trend, and that is just a basis for your understanding. That was not for anything. That's not for you to learn how to trade this. The next part of this video is going to be for you to learn how to trade this. But the whole point of that first part of the video is to explain we are trading with trends, and the way we're doing it is we're using daily candles to identify our trend, and then we're using the 15-minute candles to enter based on the correction and pullback and continuation like Sai teaches. So now what I'm going to do is I'm going to show you from start to finish what a daily routine would look like in practicing this strategy, and I'm going to show you a real-time example that is, I didn't trade, but I did look at the charts this previous day, and I'm going to show you what, the markets are probably closing early a day, I think, or I don't even know the hours. I told myself I was taking Thanksgiving off, so I'll just show you kind of where price is at and everything like that. And I'm going to show you a real example. I'm going to show you what it would look like on a daily basis for you to sit down and actually practice this. And I've even gone as far as on my Twitter page, which the link is in the video description, I've gone as far to put together a checklist. It is a CCT trading checklist, a candle continuation trading checklist with the framework image at top. And then I've gone ahead and I've first things first, a daily checklist of about 5 things, maybe 1, 2, 3, 4, 5, 5 things that you need to do on a daily basis, which I'm going to show you in real time on this actual video in the next part. But I'm also going to, also at the bottom of this, I've put some trading rules and everything that you need to go over, and images and things like that, so that way you know. And I'm going to go over this really quick just so you guys have a general idea, and then I'll show you it all in practice in the next part of this video. So the very first, this is just a framework image at the top, and then the checklist begins. The very first thing you're going to do is you're going to analyze the charts at 5 p.m. Eastern Standard Time, which is the daily candle close. When a daily candle closes, that's when you want to look at the charts and you want to start marking things up. The first thing you're going to do, I always stress this, is it's trade selection. You're going to first mark to keep any pairs that have the previous daily candle closing beyond other daily candles that had not been closed beyond before. And I left an image for you guys. You can see this daily candle closed beyond this daily candle. The next thing you're going to do is you're going to now eliminate any pairs that don't have any valid daily candle close beyond any other daily candles. So if you look at a pair and you see that this daily candle is where you closed, you didn't close beyond anything else, if this previous move already happened, this is not something you're going to trade. So I'm going to show you the 7 pairs that you should use, but you're not going to use every pair every day. You're only going to use probably a handful of them. So in this example, there's not going to be any valid setup here. So you're going to eliminate that pair. What you're going to do is cut back fat and noise and everything that's getting in the way and distracting you of what you should actually be trading. You're going to find that when you are very dialed in with trade selection and you're cutting back all of the noise and all of the things that don't matter, the things that do matter and the obvious trades are going to just appear before you. It's true. It's not as much about trying to find the trade. It's about eliminating which trades are not the move at all for the day, right? So Then you draw on your point of interest. This part is probably going to be super helpful for people in this video in particular, because a point of interest is a line that a daily candle closed beyond. It's a high or a low. In this case, it happens to be highs, and it's any point that had not been touched before that gets closed beyond. So you see these are two daily highs that created a point of interest because our daily candle close when we came to the chart closed beyond both of them. And then the last thing that you are going to do, there's no picture for it because it's alerts, you are going to set alerts on all POIs, which are these lines, and you're going to keep your phone ringer on so you know when they get hit. Once they get hit and price closes inside the POI, you'll need to set another alert for when they go back outside the POI. I'm going to break all of this down in the strategy video that we are inside of right now, but I put it in here for those of you guys to refer back to this video if need be. Now, trading rules. The pairs you're going to trade are all 7 US dollar pairs. That's going to be Euro US dollar, Australian US dollar, New Zealand US dollar, Pound US dollar CAD, US dollar franc, and US dollar yen. These are the main 7 US dollar pairs. And then the only time frames I want you using for the sake of those practicing, I put on my Twitter page different time frames that you can use. But for those of you who are just learning, or those of you who are trying to take this seriously, the daily for your higher time frame and the 15-minute for your lower time frame are going to be the most important. Now, before we get any further, I'm going to go back up to this framework image. This is kind of what I was showing you, and this is what I'm going to show you in the next part of this video. You have got a higher time frame, which is the daily, and you could see these big candles are the daily, and then you've got a lower time frame, which is the 15-minute. Guys, keep in mind, we are about to show you guys a real-time example, and I'm going to show you from start to finish what it looks like to sit down in front of the charts and to trade this strategy from start to finish. And then you've got a lower time frame, 15-minute. After you see that daily candle close, you wait for price on the 15-minute to pull back inside and then to go further beyond to target that high again, or vice versa in the case of a short. Now, I showed you that framework picture for the next part of this trading rule set. I've included in all of this for you guys just some kind of guardrails to help you get to where you need to go. Trade limit, 1 to 2 trades per day, only 1 if you win. Trade management, let trades play out, but it's wise to move stop loss to break even if you pushed a significant amount towards profit. I'm not big on trailing my stop aggressively on this. As you guys can see, I typically don't at all. The most I'll do is move my stop loss to break even. If you've pushed like 80% of the way towards take profit, move your stop loss a couple pips in profit. There's no point in losing money on a trade like that at that point. Risk to reward, it must be 1-to-1 risk to reward or greater. It has to be positive risk to reward. If it is not positive risk to reward, do not take it. And I put this here for you guys to remember. You are only entering in the same area as the big players if there is positive risk to reward available. You have to remember that. If you're negative risk to reward on the entry, you are probably entering when some of the bigger players are going to start offloading their profits. So you don't want to do that. You could get caught in a pullback that you might not be able to sustain, or it could flip if all the big players offload before it runs to the draw on liquidity, which is rare, but it can happen. The most you want to do, like I said, move stop loss to break even and make sure you're positive risk to reward. Now, entries, there's 2 models. Model 1 is the main one that you're going to see. It's a 15-minute candle range flip with price closing back outside of the POI. So basically, this is a short example, but the daily candle had closed lower than the previous daily candle, and the 15-minute candles ranges were closing higher. You can see once we get back inside the POI, which is this black line, it closes inside here, and then you get candle ranges closing higher again, and then finally candle ranges flip. That means the direction has flipped. The trend has flipped on the 15-minute when the candle ranges have flipped. You do not enter here though. You wait for price to come back below that POI, and you have everything you need for that entry model number 1 to take the short. Now, entry model number 2, it's the same thing. You can see this red candle. This is actually a trade we took the other day. This red candle closes below the POI, and then the blue candle closes back inside of it. And before this candle range even gets flipped, you have an entry available because of an inversion fair value gap. And so an inversion fair value gap is pretty much entry model number 2. Entry model number 1 is just basically making sure that the candle ranges flip the other direction. So these are just as good as each other. It is basically two ways to identify a trend switch on the 15 minute, because when you have price close back below the POI and gets outside of it again, you just need a trend switch. However that looks to you, those are two methods I personally use that I think work better than change of structure or change of character, market structure shift, all of that. Because when you get all that, you're going to be in the move so late, there's no way you're getting positive risk reward. Take profit is always matching the high, and this we're going to show that this is actually an image from the example I'm going to go over today. But draw on liquidity is basically that previous highest point or lowest point that price went on the daily candle or the current day that you want price to make its way back to. And then the stop loss is always going to be the swing low or high of your entry model. Basically, wherever you enter, it's that lowest point. It's an obvious point to put your stop loss. Now, this is just something I put together, kind of as a Thanksgiving gift, as a channel gift. This video is going to be pinned to my channel, so I want to put this out there for you guys just for free. You can always refer back to it. It has not much to do with the video today. Everything that I went over here, I'm going to be going over in the video today, but this is for you guys to keep in your back pocket when you're trading, to refer back to if you don't want to watch this whole video, because this video is already pretty long. But it's right here in the bio of my Twitter profile. The link to my Twitter profile is in this video description. The only thing I ask is when you go and you grab this link, just follow me, because I'm putting out more gems on here. I put out a time frame correlation image that I put together today, some case studies, some examples. I'm going to keep building this out, so I want you guys to be a part of the Twitter just as much as the YouTube. Now, jumping into the trading day, into the trading example, this is the part of the video you have all been waiting for, and this is what it looks like to sit down on a daily basis and actually trade CCT, actually trade candle continuation theory. And this is what we're going to do. This is a perfect example, basically on pound US dollar. First things first, I'm going to try to do this all in order. You're going to sit down at the charts at 5 p.m. Eastern Standard Time. You are going to set an alert on your phone, and you are going to basically set that alert to tell you, hey, check the charts. You've got from 5 p.m. to 6 p.m. to check all your pairs, but what you're going to do is you're going to sit down and you're going to try to find the pairs like this pair right here where this previous day candle closed beyond another daily candle. The very next thing you're going to do is you're going to mark up the point it closed beyond. So you can see this is the high that we closed beyond. This is your point of interest. Now, the very next thing, this is going to sound so simple, it's going to be so short. The very next thing you're going to do after that is you're going to set an alert on price. We're in bar replay mode, but pretend we set an alert on here. Now, you're going to leave the charts. Mind you, you're going to do this for all of your pairs. And then you're going to keep your ringer on your phone. And what's going to happen is later on, hopefully it didn't, yeah, it went crazy. Later on, when price hits your point of interest right in here, you're going to get an alert on your phone. It's going to say, hey, your point of interest just got hit, whatever you labeled it, whatever. After that, you're going to wait and make sure price closes inside of that line. It has to close back down inside of it. That is, I can't stress that enough. When it closes back inside of it, it has actually accepted this range. It has traded back inside of this range and it's accepted it. Now what you're going to do again, you spend a little bit of time on the charts making sure that it closes beyond there. You're going to set another alert. The next alert you're going to set, it needs to be when price closes above here again. And remember this, you can set alerts for when candles close on TradingView. They do not just have to be when price touches it. So you can actually get notified when this candle closes through. Now the next alert you're going to set is when price closes back through. And it's make sure you set it on the 15 minute because you want a 15-minute candle close through. So when price closes through on the 15 minute and closes back up on the 15 minute. Now, when price closes back up on the 15 minute, basically what you're going to look for is one of your entry models. So we'll just skip forward a little bit. You're going to see that price does close back above here. Now, price needs two things once it closes back above here. It needs either an inversion fair value gap, which we have a fair value gap right here that has not been inverted yet, or you need candle ranges to flip. On the 15-minute, what candle range are we in? We are still in this big down candle range because you can see the high here has not been taken, the low here has not been taken. We are inside of it. So we either need price to get above here, or we need price to basically invert this fair value gap now that we are above this point of interest, which I will make red. And so you do wait for that to happen once you're there, and then you get an inversion fair value gap or you close beyond the range, and then you have your entry. Stop loss goes right at this lowest point, and then your take profit is all the way up here at draw on liquidity. Your draw on liquidity is just that furthest point most recently. That is where price is attracted to, that is where it wants to go. And so you just draw it on, you mark up your liquidity, and price goes up there, and now you're in the trade. Now you don't touch it. You let it run to stop or take profit, or if it's run far enough, you basically just set your stop at break even or whatnot. Now this is an active working trade right now. I am not in this trade, clearly. I told myself I'm taking Thanksgiving off. This trade's pushed over 34 pips, so a little bit upset that we took it off, but neither here nor there. You can see clearly though that in a situation like this, you would probably move your stop loss up in here to like, a couple pips in profit, or you can move it structurally, however you want to do it. I would probably just put it right there and let it ride all the way, or I get taken out for a few bucks. That's how I've been doing things, and the reason I've been doing it is because it just runs to full take profit more times than not, so I don't want to choke it out, but you want to maybe lock in like 1 or 2 pips, 3 or 4 or 5 pips, because those will add up on all your break evens. Never put it at exactly break even. I can't stress that enough. But this is the method, guys. This is the strategy. This is start to finish. I know the start to finish part was a lot more simple than the whole first half of the video, but hopefully in the first half of the video, we built a foundation. I told you where this is coming from. It's coming from Trades by Cy, and then after we built the foundation and told you how we're trading with trend, I've showed you the trading journal and not the trading journal, but the trading checklist and the trading rules. It's a resource for you guys to refer back to. And then at the very end of the video, I showed you from start to finish what all of that checklist and what all of those trading rules put into practice actually looks like, and how you're getting phenomenal trades like this. And however you guys want to take profit, however you guys want to manage your trades, however you want to do it, by all means, go ahead and do it. But this is, we're hitting trades like this on a daily basis, 1 to 4.49R. The trade's already pushed 1 to 3, on a holiday. Like, if the markets are even moving like this on a holiday, there's something to be said about it. So I'm going to pin this video. to the homepage of the channel. This is CCT. This is candle continuation theory. This is how you can use daily candles to basically know exactly where you need to be trading on the smaller time frames, and to be catching home run moves over and over again on a daily basis. And this is how we are flipping our account up. So this is my thank you to everyone for Thanksgiving. This is my thank you to everyone on the channel for supporting me on the journey. And this has been one of the best runs we've had in a long time, and I'm just excited to continue it with you guys. So I love seeing how good everyone's doing, and I love just that everyone's joining me on this journey. So I'm gonna leave it at that. This is a long video. Like I said, I wanted to take my time on it. This is going to be a resource video, an educational video. This is not a daily trade breakdown, but rather a full strategy visual breakdown for you guys to actually understand what we're doing when you come to all of our other videos. So if you want, grab that resource on the Twitter page. Like I said, follow me there. Follow me on YouTube. Subscribe. Hit the bell notification. Comment, like, all that fun stuff. And I will see you guys tomorrow if we've got any other setups. And if not, Saturday on our psychology video. I love you all. Have a good one.